Welcome to Real Estate in the Digital Age, or the REDA podcast. Real estate entrepreneurs Ryan Poole and Ryan Beckett bring you new content every week, reporting on market trends, industry innovations, cutting-edge real estate technology, and perspectives from the field. The future of real estate is here. Are you ready?
All right, welcome everyone to the REDA podcast, Real Estate in the Digital Age. As always, I'm here with Ryan Poole and a good friend, Grant Weiss, with his company called Rockval. And he does mostly commercial real estate, and I don't want to misdescribe it, so I'll let you go ahead and give us a little high-level view of it.
Well, thank you guys so much for inviting me on. You see this guy's hair? So I'm the CEO and founder of Rockval. We're a commercial real estate data analytics platform that also has valuation and underwriting. So if you're a real estate investor, broker, lender, you can go from start to finish on a deal, from deal discovery through the valuation and presenting process of your deal. And we're really the only platform in the market that does that right now. So you can basically take a deal from start to finish in a few minutes rather than hours, what traditionally takes. So
it's really interesting. I'm so glad you're on our podcast. Candidly, I feel like commercial is sometimes forgotten about, commercial real estate. My brokerage is residential. Our experience, Ryan Poole and I, are both residential. When we talked about tokenization, I think that kind of folds a little bit more into commercial, at least the way I get my brain around it. But it's such a large space, and with the prevalence of Airbnb, portals like Zillow, Realtor.com, it really has kind of thrown the data out there for residential, right, for a lot of people to see. So it's really, in my opinion, awesome what you're doing, because I think for people at large, commercial has kind of been an unknown entity. It's almost been unapproachable, even to people like me that have looked into investing and learning more, between the loop nets and the co-stars and stuff like that. So it's really interesting what you're doing. Just out of curiosity, what was the genesis of the idea?
Yeah, absolutely. And the platform has taken a few different turns over the many years that we've been doing this, but essentially, I went to school for finance and real estate, and we used a enterprise software to do discounted cash flow analysis, and it was really the only cash flow analysis system in the space at the time. And basically, it took us probably 2 or 3 days just to learn how to do it. Yeah. You would basically go through a whole enterprise certification course, but this is the software that's being used at Blackstone and Goldman and all these institutions. And me naively being, fresh out of school, I was like, oh, this is the software that they're teaching us. The entire real estate universe must be using this thing.
Right.
And so I start building this massive enterprise software to compete with this industry standard, to find out that about 1% of the industry uses it.
Wow.
Everybody else is using Excel.
Wow.
Excel spreadsheets.
And to break into that enterprise world of software, it's extremely challenging. Mm-hmm. And there's a software in the market that popped up while we were going through the process of building that original software, and they've spent over $20 million trying to go after this industry incumbent called Argus. And they haven't been able to touch them.
Wow.
Over $20 million. And we're a lean startup, so we took a huge pivot, went towards, being a very affordable, simple software, and, it's taken off since.
Yeah. I mean, I'm just myself here, having been in residential real estate for 20 years, I have a perfect scenario here where I'm actually using Rockval, right? I'm on there now. Is like, I'm a residential agent. I actually got a great contact with an investor that wants to buy multifamily. Where do I start? I'm not going to go and join CoStar, right, and learn this Argus software for 1 or 2 deals for some of these investors, but I can actually get on Rockval and start looking at the valuations, actually do a proforma, do a light, analysis right there on the platform, correct?
Yes, sir.
And with those valuation tools, can you bleed into residential on that, or are you guys geared specifically for commercial?
So I guess, defining commercial, you have the 3, primaries of like office, retail, and industrial. Mm-hmm. And then you also have your multifamily, you have hotel, you've got condo development, or if you're a home builder, and you buy 50 acres and you're going to, go build 100 homes on it. So we cover all of that. But because of the interest in the SFR space and like the single family rental space, we are actually adding single family rentals to the platform because the market for that is just phenomenal. And a lot of the data sets that we're getting apply to both multi and the SFR space.
Got it. And how would you compare that to valuation tools that I recently learned about with programs like, what is it, AirDNA? They do some kind of like rental valuations, right? But is that more for Airbnb, hence the branding?
For sure. And they actually have a data set. So we're integrated with Cherry, and they're one of the data partners that we would be looking to integrate into our platform.
Got it.
So yeah, all the Airbnb data, there's a lot of, different companies out there that are scraping, the VRBOs, even the MLS has a lot of listing data that we can pull as well. So
interesting. And who have you identified as your customer? Is it mainly investors? Have you found people like me that have always wanted to get in commercial that are now leaning in on your platform?
Yeah, so I guess currently we have two primary customer groups. One is a sponsor, syndicator of a deal. So this is the individual who's looking for new opportunities, who's contacting owners saying, hey, do you want to sell your asset? Trying to structure the deal and then go raise limited partner capital. The other primary user is our investment sales brokers. So, you work at, Marcus and Melchap, and you have a client that's looking for multi in South Florida or wherever, we're nationwide. You would use Rockval to identify those assets, put together some quick numbers, and then send it to your client as well.
Love it.
The last one is the resi going commercial.
Yes.
Interesting.
But that requires education.
Right.
So we're putting together some pretty extensive educational content to help bridge that gap, because as soon as you start talking about cap rates and discounted cash flow, you have a lot of people that kind of just like back off. So it's like making that so digestible, because the concepts, as soon as you have the concept of what a cap rate is, you understand 99% of what commercial real estate is.
Yeah. It comes down a lot to the cap rate at the end of the day.
That's literally it.
Yeah, no, it is. And it's exciting. I mean, I've seen a lot of real estate investors, just especially within the last 5 years, really since COVID, where it's really accelerated. They call them the rentalpreneurs that are buying these single family homes, having great cash flow, especially when you look at a leveraged option. I mean, some of the IRRs on the cash is incredible.
For sure. And then one of the things that people, and I'm kind of on the fence about this because I am, very fiscally conservative, but you have large institutions buying up portfolios of single family homes. And, I go back and forth because I'm like, should Blackstone own the homes that, the kid out of college would buy?
Traditionally the best wealth generator for middle class Americans is purchase of their home.
So I'm glad you brought that up, and I know that I feel like it's a bad thing, but I haven't had the chance to educate myself as well as to potentially why Blackstone consolidating all this. It feels like it's bad, but what would you say is the big worry of a consolidation, like a company like that owning a bunch of single family homes?
It really comes down to cost of capital. And if they're, Blackstone bought Invitation Homes, I forgot what year, it's like for like $1 billion or something. And they're buying these big portfolios of homes. And what that does is drives up home prices. And then, the way that they're getting their returns is renting them out.
Correct.
So it's just very challenging because the home ownership, you're looking at,
especially here in Florida. I mean, the inventory right now, there's 5 million homes throughout the United States that we're, deficit on inventory right now.
Yeah,
for sure.
And when you say cost of capital, is that because it's a competitive advantage, maybe an unfair advantage, because a company like Blackstone has a lower cost of capital to the average purchaser?
For sure.
Yeah.
For sure.
Interesting.
And the one platform that we recently identified is, and the reason why they can buy in bulk and really, drive down, they can get a great price is when you do a residential deal, how many fees are baked into that deal, right? You have the brokerage fee, you have, other, due diligence fees, appraisal fees, like they're at scale.
Yeah.
And what they're able to do
Your title insurance fees are a big one.
Right.
Yeah.
And what they're able to do is actually get the asset for lower than list price and they're doing this through basically wholesalers and people that are targeting these portfolios of homes that are owned by one owner. And then they're able to sell them off to the institutions because the one owner sees that if they wanted to sell each one individually versus taking a 5% haircut on the entire portfolio but selling it, at the end of the day, they're net positive compared to selling them individually. And that's where Blackstone has
a big advantage.
I'm not against Blackstone by any means.
Mm-hmm.
Yeah.
I'm just saying, like, institutions, should they own single-family homes in bulk? I don't, I'm a little mixed on it.
It's interesting because one of our other podcast topics was iBuyers as it relates to Zillow, and that made big news because it kind of imploded for Zillow, and they hung their hat on Zestimate valuations, intelligent ones as well. That apparently was one of their Achilles heel in the iBuyers.
But they've now partnered with Opendoor.
Now they partner with Opendoor, which we mentioned on that podcast. What do you think is the reason why Blackstone has been able to successfully do it in a company with Zillow, as big as they are, with their valuation models and all the resources they have in capital, that it imploded?
I think that they take a much more methodical approach. Like they're boots on the ground. They have Invitation Homes that already has this big distribution of managers and brokers and things of that nature. So they had this infrastructure already built to where I don't know if Zillow has this huge infrastructure of managers and people.
Asset managers, having done that myself, for years. I mean, you really need an expert on the ground that literally is valuing those properties on a property level basis.
Right. Which goes back to our other point of the value of realtors.
I know it's true, though.
I mean, realtors can get in the way, but it's like any other industry. The cream rises to the top, and the good ones bring value, and the other ones that just try to collect a check and show where the kitchen is, that don't bring value. That's the inefficiency in the market. So super interesting.
Excellent. So I this is the REDA podcast, Real Estate in the Digital Age. What ways, Grant, do you see, for instance, data analytics valuation? I know you're using it on your platform. Where do you see that trend going with commercial real estate as far as tech on that side?
For sure. So I guess traditionally what we've seen is, if you're a commercial broker, you were always like, commercial broker, commercial landlord, your data was like your secret sauce. Like
Yes.
you would hug the data so close to you. And I think people are seeing to where, you have a lot more transparency in the space.
Yeah.
You have companies like Cherry, ComStack, Trep is starting to do these bigger partnership deals.
PropStream.
SafeGraph. Yeah. So you have all of these different platforms that are collecting data, that are surfacing this data, and your competitive advantage kind of is starting, in terms of like data, is starting to
erode.
But did anybody have really competitive advantage in the first place? It was kind of like
CoStar had a pretty good corner there for a long time.
But them selling the dream of your competitive advantage with data. Data is important because you still have to be able to understand what's going on in the market, what the market trends are, and things of that nature. But commercial real estate really comes down to relationships. That's literally, I guess that's all real estate. It comes down to relationships. And if you don't have the right workflow, then you're just going to be behind the game. Like, you shouldn't have to worry about the data, the workflow, and kind of your day-to-day technology practice.
Yeah.
But you should be focusing all your time on building those relationships. And that's where companies like Rockval come in to bring all that data transparency, automate your workflow so that you can basically spend 99% of your time building relationships.
Correct.
And adding value to your client. That's really your secret sauce as a broker or as an investor. We're launching a big pilot with a national firm right now, and the broker's like, okay, I get all this data, you see all the data, but like at the end of the day, he's like, I just need to add my little secret sauce to how we're pitching this deal or how we're positioning this deal for the future of the market. And that's something that, a technology platform can try to automate, but we'll never get to that, broker specific boots on the ground type of analysis.
Interesting. And you're just such a wealth of knowledge as it relates to commercial, and I appreciate it. And so I have another question that I find interesting. In residential, a lot of real estate brokerages and people in the industry are keeping an eye on it about buyer representation and the legality of it when the seller pays the commission without digressing into the weeds on that. And what I learned in residential real estate is in Europe, for example, that's really how residential's done more or less. It's more listing agent heavy. And then I found out commercial in the United States, I try to give a very good restaurant purchaser commercial real estate deal to a broker that I'm friends with at Cushman Wakefield down in Miami. It's like $2 million for resi. It was a pretty decent deal. For commercial, it's pretty small. And my friend that works in commercial said, Ryan, we have a saying in commercial. We would fly across the country for a listing. We wouldn't walk across the street for a buyer.
Right.
And I found that so interesting. And I understand that. Listing agents, in resi, if you price something right, your conversion rate's higher. You start practicing and trafficking on the buy side. If you're batting 300 like Major League Baseball, you're doing right. You're doing well in conversion, right? So it's just interesting. Is that what you see? And is that involved in your platform at all? Because that was new to me, that's how commercial's done in the United States, more listing heavy.
For sure. So like we don't feature listings yet. We are integrating with like different listing services.
Mm-hmm.
But yeah, in general, that's kind of how it's done. There are certain cases where if you have somebody that's looking for deals off market for you, you'll definitely give them a commission on what they're finding for you. But for stuff that's on market, if you bring your buyer to the table, you're still getting a split. You're still getting a split for bringing the buyer, but working with, and especially if you don't have a reputation with somebody and you're going to go, spend a whole bunch of time evaluating opportunities. Yeah, you can get burned every time.
Yeah, super interesting. So, Poole, you wanted to talk to him. So we did data analytics. Are you guys using any artificial intelligence within your platform?
Yes, sir. So we're actually rolling out a lot of these. So we have terabytes and terabytes of data. We spend a lot of money on data.
Yeah, good burn right there.
Yeah, so terabytes and terabytes of data, and we need to synthesize, what this data means. And because, basically if I walk you through the workflow of the platform, we want to help you find which markets to target and then which assets to target in that market, and then show you why you should be targeting those assets in that market. So using AI to train all of our different models, so it could come down to markets that are less competitive. So maybe you're not necessarily focused on one given market, and we interview people from across the country as well in our own series and our own article series about what's going on across the country. Going back to the AI piece, so being able to automate, if I'm looking at the building that we're in right now, could I come up with an automated value that ties to a specific model, not giving you a range from 0 to 10 on the value of the property, but actually tying a financial model to the property on an automated basis. And that's the stuff that we're rolling out right now.
Wow.
So it's like you have a property, you say, okay, this is what the current situation would look like. This is what the value add situation could look like. And then, what if 313 Datura and you wanted to turn into multifamily? Right? You wanted to just go vertical. You can automate these different scenarios, or at least give the user a leg up on how you could potentially see the opportunity, and then basically allow them to make slight modifications depending on how they want to adjust the model, but have 90% of the work done for you.
Really interesting. I learned, I had a professor in my class as we were doing regression analysis. She shut the door because she was more of the teacher's assistant, because she didn't want to hear the PhD professors hear her say this. And she showed us IBM Watson, and we had our data set. She goes, watch this. We're used to, running manually what I would refer to more as like a Dewey Decimal System of statistics. She just drops this data set in IBM Watson in 30 seconds. It teases out all of these statistically significant findings that you wouldn't even thought to test.
Yeah.
So where my brain goes as you're describing that, we hear in real estate highest and best use.
I was just going to say, what's your highest and best use?
And it's interesting, and I assume that if it doesn't do it already, it probably will. The value with AI is you can take that data set, and you may not even think about making this hospitality, but AI could tease the different highest and best use for the property. And we may not even thought about bringing this building to hospitality or short-term rentals. Is that something that AI is doing already?
For sure.
Interesting.
For sure.
Wow.
So highest and best use analysis, but then also taking the traditional sense of, because we look at it as, you have to solve 4 different hurdles. How much can the property make? what are the expenses, what's the CapEx, and then what are the capital markets behind it.
Mm-hmm.
If you can solve those 4 problems, you can automate the analysis.
So that's
Wow.
great. Which is a great segue into the next one here, the capital markets, which is big in commercial real estate, of technology now disrupting that space. How do you feel about, tokenization of real estate, all these different technologies? We had a great podcast not too long ago on that. Where do you see that going with commercial real estate, Grant?
So I don't like the name tokenization.
Yeah, I can agree with you on that.
I don't like the name crypto either.
Yep.
I like to call it fractional ownership.
Mhm.
Tokenization being the technology to facilitate fractional ownership, right? So fine. I think fractional ownership is here to stay. I think, if you can buy a property or you can raise a fund with a, Reg A or Reg CF and bring in non-accredited investors, I think that's a huge, huge opportunity. But then, having the tokenization to help automate, being able to trade shares on secondary markets.
The secondary market.
But even so, if tokenization is a short-lived thing, which I don't think it is, because it is a great technology to ensure that there's a proper history with the data.
Yeah.
I think that regardless, you'll still have the ability to trade secondary shares on a market. So regardless of tokenization, I think that this other factor is still here to stay. We're integrating with multiple tokenization platforms right now. We have the ability so we take you from deal discovery, underwriting, and basically deal package creation, so that when you go to pitch an investor, they have the data, they have the underwriting, they have all the packaging to basically say okay, I want to invest in this or not.
Yep.
A lot of these platforms don't have any of those precursor steps.
Yeah.
So if they can go on Rockval, click a button, and basically have that deal published on another platform that has all that backing, all the data, all the analytics already done, it makes the sponsor's job that much easier to put all the information together, because a lot of these platforms, it's basically upload all your documents here, and then you have to parse your own documents and put everything together. But if you already have that done in Rockval, it just makes it that much easier.
Yeah.
Really interesting. I'm so glad you framed it that way. I think maybe I said that on the podcast, but I describe it the same way. Whether you're a politician trying to get a certain bill through, it's kind of how you frame it, how you brand it, right? And, crypto it's cryptic, which kind of has a negative connotation. Tokenization, because of these ICOs and a bunch of different reasons that are top of mind, sometimes depending on the person's level of knowledge, can have a negative connotation. I describe it as a digital stock certificate.
Yeah.
That's all it is. And people understand stock, right? And that's all it is. And what I say is we've been doing it for publicly traded companies, for a liquidity event from private companies for a very, very long time. The SEC understands that implicitly better than anyone else. And what I've learned in my studies is, as ambiguous as the SEC's been with crypto, tokens, currencies, ICOs, all that, the United States is one of the most friendly, as I understand it, for real estate tokenization, because as it was explained to me, the SEC goes, this is non-ambiguous at all. This is easy. This is security.
Yeah.
There's no ambiguity at all. And we're going to treat it as such. And accredited investors, I invest with 2 companies, Red Swan and one called Realty out of Boca. And I'm so impressed with them. I'm just tip of the iceberg, drinking from the fire hose. Right. But I'm super interested in it. But I'm happy you framed it that way, because I think, as I study adoption of it, that's what takes it. It's the understanding of it. And I think when you frame it like that, it gives people a better and more clear, honest understanding of what it is. Right. So I appreciate that a lot.
Yeah, no, it's a great point here, because obviously we're how is technology disrupting the commercial real estate, and people don't realize 90% of U.S. millionaires through history have been made in real estate, even with that high barrier for entry. So having access to now commercial real estate investment is a big one.
And I'll just dovetail that or add on to it that not only is it created, it's kept and preserved there. Inflation being a hot topic. Well, as we've discussed, who wins during inflationary periods? Mm-hmm. Asset owners. So even if the market stagnates or go down, if inflation's at 8.6%, sure, maybe it doesn't track perfectly, but whether your money's in cars or art or gold or real estate, inflation affects assets, right? So you're somewhat insulated as a result, So it's definitely interesting.
Yeah.
And what about the debt markets too? of being able to, tokenize that as well. Have you seen some of that as well?
Yeah. The platform, I'm gonna Sands Bank. I think that's the platform that's tokenizing the debt market. But that's the other thing. Tokenization of the debt market has already been established, basically.
Yeah.
So you have CMBS, you have Fannie Mae, Freddie Mac, you have all these like
mortgage-backed
collateralized
securities.
Yeah, you have these, real estate-backed securities. So it's already been done. It's just painting it with a little bit of a different picture.
Yeah, allowing everybody else to have access to those debt instruments pretty easily.
Right.
And create them for your own house.
For sure. And I think it's just such an interesting time to be in real estate when you have, it's still not mainstream by any means. You're talking about a very, very small fraction of the entire market being tokenized right now. And, with the technology being able to facilitate the buying and selling, and especially, you have the two main pieces is you have a primary offering.
Mm-hmm.
So if you have a building that's, privately owned, you have to take that just like an IPO.
Yep.
You have your building's IPO. You take that public, basically. And then you have the secondary trading.
Yes.
So some of the regulations require a 1-year holdout to do secondary trading. Some do not. So that really depends. And it's the same like lockout period stuff that you would see in like the stock exchange and things of that nature. So I think it's really interesting. I think you're going to see a lot of people not maybe tokenizing the whole equity pool, but maybe 20%, 50% of it.
Mm-hmm.
So you still have, 49% of it. So you still have that ease of
property
transfer.
management.
Right. You still have that ease of transferring ownership title, but maybe it's 51%.
Interesting. That's super interesting.
I know. I really feel like whoever nails the secondary market trading for real estate tokens and the debt tokens would be just a total game changer.
Well, I know big secondary markets, primary markets, like in New York Stock Exchange, just talked about it, right? NASDAQ, New York Stock Exchange. Like, I think that if they don't want to be a blockbuster, obviously I'm being dramatic, like they're going to miss the boat,
So we're actually talking to a platform right now who just got backed by the New York Stock Exchange.
Wow. Okay.
And
There you
Is
go.
that T0?
It's T0.
There you go.
So T0 is backed. I forgot the name of the company. It's like Intercontinental or Inter something. The parent company is like Inter whatever it is. But yeah, they all see this private market, and if they can take all these private assets public, like they're going to make some cash. So it makes total sense. And NASDAQ already has made a move into their NYSE. You're going to see them all do it. I think it makes total sense.
Wow. Interesting. So, Poole, you were going to ask about architectural visualization?
Yeah, no, that's a big one too. I see, especially investing in commercial real estate. Like I'm dealing with it right now with some investors that, are in Canada, in Toronto. They want to discover these deals, virtually experience the commercial real estate. Where do you see that technology going? I know you have some ideas on that as well, Grant.
Yeah, so we actually have a mobile app, and we are integrating with a company that is competing with like a Matterport.
Okay.
So we're going to be integrating so that, you are a syndicator sponsor, you're Ryan Poole, and somebody's like, hey, find me multifamily in South Florida, but I want to be able to see what's going on kind of. So if you can have that capture of the space with your app and you make that a virtual experience for your buyer, it's just super powerful. So like those are like the it seems like, it's a very straightforward value prop.
Mm-hmm.
It's not unicorns.
Right.
It's like, okay, can I visualize the space with my phone?
Yeah. Yeah. As much as we try to boil the ocean in the tech world and being an entrepreneur, sometimes it's just like common sense, right? Like just make the people's life easier and more efficient. And like, those are some of the best ideas you can put into your company.
For sure. I think Bezos, however you guys say it. He's always, he always preaches, it's like, you have to have a solution that the market can adopt now.
Right.
And there's so much tech forward stuff. And you see, tokenization 5 years ago versus now. It's a huge change. It's huge.
It is.
Change.
We've watched it. We've had a front row seat to it.
It's still very new, but it's still like, when I talk to sponsors, syndicators, landlords throughout the country, it's rare that people are tokenizing right now, but it's definitely becoming more popular. I was at ICSC, the International Shopping Center Council. Yeah, I think that was it. International Shopping Center Council. And basically they have somebody talking about tokenization on stage from Red Swan. And, you know, you have these landlords that I know from South Florida there, and they're all listening in. They kind of want to see what's going on. But, you know, what happens is with tokenization and fractional ownership, as the sponsor, the landlord, you're also getting a premium on your shares because your shares are liquid now.
Right.
And you can expect a 20% premium on your shares.
Because you're erasing the illiquidity discount.
Right.
Yeah.
Exactly.
Yeah. Super interesting. You know, one of the things, maybe you have an answer. I haven't been able to figure out an answer. So not only am I studying this, Ryan Poole made me aware of this when I first met him 4 or 5 years ago, and I invest in it, right? And my cap rates are on average, I think, around 8%. I can depreciate. I get K1'd. I can depreciate the tax, which helps me on my taxes, which was I was investing anyways. And then I learned that. I was like, oh my gosh, this is amazing. But even though I've been calling it, it's like other than my investing and getting 8% cap rates, I don't really get a huge windfall for calling this for a long time, right? Like I know it's coming. I'm investing in the tokens. I'm studying it. But I was like, man, how can I frame it for being an early adopter where I have a big upside other than starting my own tokenization economy, right? Or investing in companies like yours and Red Swan and things like that. I'm trying to figure out a way like how I can put my money on what I believe to be true other than a passive investor. Because I'll just go at 8% caps, right? And I'll enjoy the real estate benefits of tax deductions and things like that. Have you been able to identify of a way other than using Rockval and investing, you know, that I can bet on the industry other than just passive investing?
Yeah, I don't know. I know that there's, you know, Red Swan's a great company. I know those guys really well. You know,
let's create a fund and start buying some real estate and tokenize it. I mean,
then you're talking about being like, I guess, like a VC.
Yeah.
I guess, you know, but the tokenization, you're not making so right, like you're not making money on the tokenization. You're making money on the actual asset, and that's you know the beauty of tokenization and that's why like I've never touched anything outside of, you know, if it's not asset backed and it's purely speculative, then you're betting like, I'm just going to bet on the US dollar. Like, I don't know.
Right.
Yeah.
But like with the tokens, it's like, did the asset go up in value or down in value?
Right.
So it's all backed. But yeah, getting more involved in the industry. I don't know unless you're investing in the tokenization platforms.
Yeah. Because you have that 20% kick, you know, in theory that economists say because of the erasing the illiquidity discount. But outside of that, I'm like, man, it's like if you know that Apple's going to be a thing when Steve Jobs first came out with his iPod, you can invest some money into that stock and you know that there's a high appreciation, right? And I guess it's a double-edged sword with real estate is the stability. It's worth what someone's willing to pay for it, what the rent rolls are, you know, all that stuff. So conversation to be continued because I you know, it's one of those things I know is going to happen. I'm confident in it. I just want to make sure I have a horse in the race, so to speak, you know?
Yeah,
so
sure.
Good stuff. Good stuff.
That's exciting. We're winding down here. This has been amazing value that's been shared here with the listeners. You know, we have a wide lot of residential, you know, real estate agents, buyers and sellers, obviously people, you know, interested in commercial real estate as well that are listening. What would be one thing, like I've seen this big trend now, obviously with e-commerce. We've been watching this in real time as well here in the last 10 years. Where do you see that affecting, you know, traditional commercial real estates? Like I've heard like, you know, all these malls across America now.
Right.
That are getting disrupted by e-commerce, and they're thinking of creative ways now to repurpose those spaces.
Yeah, no. So the number of malls in the U.S. have been decreasing steadily over the last decade. You know, I think there was an announcement recently where it's like it's going to go down to like 200 malls or something like that.
Wow.
But it's just, you know, so e-commerce stores have been good for like suburban or like downtown retail. So you see, you know, people that have, you know, digital stores that are getting a brick and mortar store once they get traction online and they have that like real presence. Malls, you know, I know, you know, malls in Newport Richie demolished. They're putting up a bunch of multifamily.
Multifamily.
Right. Like, I don't know, like you can't, I don't know how many trampoline parks can you possibly have
Right.
throughout the country. But yeah, I think, considering the housing crisis is probably a heavy word, but considering the housing dilemma and the cost of housing, I think, multifamily's here for the long haul, single family rentals and being able to, basically buy a mall that's not cash flowing at all and demolish it and put up a bunch of homes. Like it's a safe bet. Sure, as the mall owner, you're going to get a haircut, but as a mall owner, I think the best opportunity is to JV with whoever's going to be building what's next.
Yeah.
So that you can recuperate some of that, upside through like single family home sales or something like that.
So I remember a company a while back ago called Simon that was buying up almost like it seemed like a roll-up company of malls. Are they just sucking wind right now? Or are they holding strong? Because I know they owned a ton of malls, at least if memory serves.
Yeah, no, they definitely got hurt very bad. They still own some primary malls like the Boca Mall. They have a few others that, Boca's a very unique market. It's a very, very rich market.
Yep.
If you're going to these high-end stores like Chanel and what have you, like you want people to see you go to that store.
Right.
So like
carry around the bag,
right,
the whole
like,
old school.
Like you have some of those like really affluent areas where the malls are still thriving, but if it's a BC market, like you're not going to be
Interesting.
Everybody's going to Amazon or what have you.
Interesting. And I know we touched on it. I'm very bullish on this space as well. What are your thoughts as it relates to real estate, commercial, the market at large with virtual reality and augmented reality? Like, where do you think that's going?
Metaverse.
The
Metaverse. I think Mark Cuban said the best. Like, people that are I'm sorry if you guys are investing.
Yeah. No, I know he's pessimistic on it, but there's been a lot of people that have been pessimistic about a lot of things that end up being correct or end up being wrong, and respected opinions too.
Got it. Well, I will put myself out there on the record where I would not be investing in metaverse real estate unless Google creates a metaverse app where you can go to the Google search engine from your VR, and you could somehow like walk through an environment, but everybody has to go there because if you're buying metaverse real estate, you're buying ads, right? You're buying ad space. So yeah, I would definitely stay away from that.
Got it. Interesting.
I think virtual reality is awesome. I think
augmented reality will be, a stepping stone into full-on virtual reality, especially for, advertising for commercial real estate.
For sure. And I don't know if you guys have seen like AR and like, you walk an empty house and you can see it all put together.
Staged, yeah.
Can you see that?
Yeah.
There's actually an app that one of my clients have used, that you can actually just film your whole inside of your home, and then they have, set up all the furniture for you. And the cool thing is you can buy the furniture, obviously, is a big selling point that they do for you.
Yeah, I think like that technology is really cool. I think that makes total sense. But if somebody's gonna go online and bid for that virtual couch,
yeah,
I don't know, man.
Interesting. It'll be a TBD. I actually don't really have a staunch opinion one way or the other. It's just one of those things that, like the internet when they were making fun of it with Bill Gates on the morning show, that thing that they were like, what's that at signal? And, oh, that's so stupid. Like, whatever. I always keep an open mind, even if I'm always open to opinions and, people can say what they want about Mark Zuckerberg. He's obviously moved the needle in a few things, and he renamed his whole parent company Meta, and he's putting a lot of stock, literally and figuratively, in the space. So it's just something at the very least I'm keeping an eye on. And to our earlier points, what I try to do is what can I use this emerging technology for efficiency? And like you said, like being able to have like a VR space, like, to actually see the space from afar and have an idea of it. One of the things, I have a lot of clients that fly in from out of town, and maybe we have 10 properties to see. So whether it's Matterport or something like that, if I can actually go in and, for example, while they're still in Toronto, we've identified 10 properties and I'm going to schlep them around all day. And they're like, wow, I couldn't tell this from the pictures, but now that my wife and I are in here, we noticed that the master bedroom's on the second floor. We need a first floor master. was like, okay, you didn't tell me that. It's great to know. Now I've just eliminated 3 or 4 off the list, and I'm way more efficient with their time, you know?
For sure.
So those are just like little things.
Yeah.
But yeah, what I call is schmuck insurance. Have you used schmuck insurance? So a lot of these brands, you know, they try to put a little boat in the water, toe in the water, so to speak, where they're like, yeah, we're Adidas, we're Sotheby's, and we're going to have a presence in the metaverse in case it's a thing, you know? But what I find different or challenging is, to your point, all these platforms have their own space, right? You know, so it kind of segments early adopters, right? Like when I go on my Meta Oculus, I haven't figured out how to go to Sandbox, right? Or decentralized, right? It's kind of siloed and it makes it clunky and stuff like that. But then again, and I know you and I've discussed Bitcoin, but you used to have custody and go buy Bitcoin early days. The people that have actually done well, no matter where Bitcoin does, the people that have made millions and millions as being early adopters, they had to go figure that out early at great security risk. It was a pain in the butt. They had to have a special way to buy it. So it'll be interesting. I love discussing this stuff with you. It'll be interesting.
I guess like one thing, this is not, I guess, real estate related, but I'm an avid learner of languages, or well, at least one language. I love languages, but language is learned visually.
Mm-hmm.
So, you know, I look at it where I have these apps, you know, I have Duolingo, I have Babbel, I have Rosetta Stone, I've got italki where you actually talk to somebody live, but I can just imagine if I can put on a VR headset and walk down the street of like somewhere in like Colombia or something, like, and I'm looking at, you know, a TV and it says like televisión, and like I don't have to translate it back into English because I can see the actual object and then I can see the name in Spanish, and I never have to translate it back into English.
Right.
So I think for language learning, it's going to be the biggest game changer in the world. I don't know why like Rosetta Stone and all these other companies aren't just like rolling out these like language, like very, when they talk about immersive, that's what it is. So like for education, or like if you could, you know, learn a class at Harvard online, but like, you know, see the professor and like
sit in the class.
Like it's amazing.
Yeah.
It's like, I love it for education.
Yeah, I actually studied Spanish down in South America, and I spent all this money. But to your point, it would have been awesome if I could have just virtually been immersed in that. Yeah, super interesting.
You couldn't smell like the fresh food, but like
yeah, exactly, or go to those tangos. Yep, for sure. Poole, can you think of anything else? Wow, what a wealth of information. We might have to do a follow-up with
I know.
this.
We might have to do a follow-up with Grant. It is. Is there anything that you felt that we missed, Grant, that you would like our listeners to hear about, you know, disruption, you know, with technology and commercial real estate? Any other points?
In the commercial space, you know, I guess the markets are definitely shifting right now. You know, interest rates are going up, cap rates are naturally have to go up. So there's just a lot of opportunity in general. You know, I know a lot of people with a lot of cash on the sidelines right now, and they're just waiting for interest rates to keep going and going and going, because, you know, at that point, cap rates will have to adjust and
prices come down.
Right. But the thing is if you can buy now, offset X amount of your shares now, you don't have to hold the whole equity bag if the market turns on you. So if you can, or maybe, you know, if you have a property management arm of your company as a sponsor and you buy the asset now, you know, maybe you still have some skin in the game, but the property management fees could be your main business. Like you're not working for the capital appreciation, but you're working as the best property manager in the space. Because at that point, you can sell 100% of the asset, and if you own the rights to be the property manager, now you basically have, you know, your franchise model. What if you get just
like disrupting the brokerage? When we did the brokerage model, I mean, it's REIT. That's the profit center.
Interesting.
Is the property management.
Yeah, we'll have to discuss that more after the podcast. That's really interesting. Yeah, that's good stuff. Well, that's fantastic. How can the audience learn more about yourself, Rockval, and what was the best way for them to find you and learn more?
Yeah. So we have a website. We also have a mobile app. So it's Rockval, ROCKVAL.com. You know, we have a very, very affordable platform, very intuitive. You know, we do demos. If you go to our website, you can schedule a demo with Mr. Connor. And I think that's probably the best way. We're on social, but definitely I definitely appreciate you guys bringing me on the podcast. It's been great.
No, we're happy to have you. I mean, it's such a value add, and we'll definitely follow up. We have a lot to talk about after the podcast.
No, I'm using Rockval here to underwrite this whole deal that I'm working on right now.
That's it. And then the last thing I just wanted to mention is, how did you do your hair this morning?
It's the only game I have, so
He's good at it.
I like to say I woke up like this.
He brings his A game every time.
It's angelic.
The headphones keep it down. Well, I appreciate it, Grant. Thank you so much. The name of the company is Rockval. Check it out. Don't forget to subscribe, smash the like button, follow us at the REDA Podcast on literally every medium, Apple Podcast, Spreaker, Spotify, everything. So once again, thank you. Thank you, Poole. Thank you, Grant.
Thank you.
Thanks. It's been fun.
It's been great. Bye, guys.
Let's get it. Let's get it. Let's get it.